Hi everyone, thanks for checking in. It's Adam Coburn here at Low & Co, and we're looking at the Wellington real estate market, the data and the facts and the trends and the graphs and everything for July 2025, comparing it to the last couple of years. In summary, folks, there are some signs that thankfully Wellington market seems to be stabilising. Values have stabilised. We've had a rough little while sort of in recent times. Some evidence that it's stabilising. And in particular, the new listings coming to the market are slowing down. So that's good news for sellers. Obviously, the fewer new listings are coming to the market, the easier it is to compete for the attention of the buyers, who really are focused on new listings more than they are focused on the existing listings that have been around for a while. So as that slows down, the buyers sort of feel a little frustrated. There's less choice coming to the market. So that's good news for sellers. For those of you who are buyers out there, whilst the number of new listings coming to market has slowed down, there are still relatively lots of property sitting on the market. So, there's still plenty of choice out there for you. So get in amongst it if you are out there looking. Let's get into the detail, folks. Median sale price, $755,000 versus $765,000 a year ago, down by 1%. What we've seen for about 3 years now, since about July 2022, broadly stable median sale prices, up a bit, down a bit, a little bit here and there, but overall, as you can see from the shape of that red line there, it's been going sideways for about 3 years ago. If you watch these videos frequently, you'll know that I don't pay too much attention to median sale price because it reflects not just the underlying values changing, but it also reflects the mix of properties sold in the month. So the better guide to underlying values, which of course is what we're all more interested in, are values increasing, decreasing, or remaining the same. The best guide is the Real Estate Institute House Price Index. So let's look at the detail there. We'll start off with what I call the league tables, and Wellington has for a long time now, since we've come off the previous peaks in late 2021, Wellington has fallen pretty much further than any other region in the country. That remains the case now at almost 26% down since the peak. Auckland City is not far behind us, and that's been the case for a long time now. So we're seeing Auckland City and Wellington City really have dropped further than anywhere else in the country. So Auckland City 23.6% down from the peak versus nearly 17% for the whole country. So Wellington has fallen further than any other region in the country since the peak in late 2021. What about over the last year? A consistent picture there. So Wellington has also fallen further than any other part of the country over the last 12 months. Not by very much. As I indicated earlier, the generally value's been going sideways for about 3 years now. So over the last year, Wellington fallen 1.2%, and the rest of the country have either fallen by less or have actually made slight gains over the last 12 months. So Wellington not faring well compared to the rest of the country over the last 12 months. Over the last 3 months, a little bit of a different story. So over the last 3 months, we have seen actually generally across the country a softer market. Wellington has fallen by 1.1%, but there are many regions across the country that have fallen by more than Wellington. So nice that Wellington is not the bottom of the world, so to speak, over the last 3 months at least. And see, look, Auckland there at down 3.3% over the last 3 months. So Auckland's had a pretty rough time over the last quarter, but there are several other regions also around the country that have dropped further than Wellington. Looking closer now at Wellington over the different time periods and the different territorial authorities. You see the graph there. Look, we did have a bit of a dip. Look at the orange line in particular. That is the 3-month cumulative result. So that's the addition, the total drop over a 3-month period. Earlier in the year, a couple of months ago, we did drop down to sort of maybe 3% down. We have recovered over the last couple of months, so heading back towards zero. So whilst values were falling not so long ago, the degree to which they're falling has been easing. We're heading back towards zero, so that's positive. Some signs that the market is stabilising. Over the last year, all of the territorial authorities there, Upper Hutt, Lower Hutt, Porirua, Wellington City, all in negative territory. So that's a reasonably consistent theme over the last 12 months, negative to varying degrees. Over the last 3 months, not quite as clear a picture. varying degrees of some small growth and varying degrees of small decreases there. So again, whilst over the last year it's been a consistently gradually negative picture, over the last 3 months a bit more mixed. So again, is that signs that the market is stabilising? Let's hope so. Looking now at Wellington City in particular, a small gain in the month of July, small losses in the 3 months, 12 months previous, and again you look at the shape of that graph, we had a bit of a drop earlier in 2025, and the last couple of months stabilising again. Some stability there, encouraging for those of us who are thinking of selling, or indeed those of us who own property. Number of new listings. This is the amount of supply coming to the market, of course. 507 listings in July versus 575 a year ago and 371 2 years ago. So this is really good news for sellers. We're seeing fewer listings coming to market over the last few months than we saw at the same time a year ago. So as I said earlier, the fewer listings are coming to the market, the easier it is for those of you who are looking to sell to compete for the attention of the buyers. So that's positive. Still lots more listings than we saw 2 years ago, but 2 years ago we were sort of heading in towards the election, and generally as we approach elections, sellers tend to hold their properties back until the election happens. And it's ironic because while people think it might not be a good idea to sell before the election because there's a bit of uncertainty, that indeed makes it quite a good time to sell often, and that was the case 2 years ago because there were so few listings coming to the market was strengthening, results were improving, sales prices were improving slightly, and then once the election was over, everyone dumped their property on the market and the market became really tough again. So often it's the case that when others are zigging, you should zag. New listings, there we go again. You see the comparison with 12 months ago. Look at the red line there. You can see the 6-month moving average. Generally over the last year or 18 months, we've been seeing more property coming to the market than we saw 12 months prior. But the blue bar chart will show you there, that's a big drop off there in the last 4 months or so. And in particular there where you compare it to that should say a July average, we are below the numbers that we normally see for the month. So typically over the last little period of time, 18 months or so, we've been definitely more than what we typically see in the month. So very positive news for sellers that you've not only has the numbers of new listings coming down, but we're even less, only by a little bit, albeit only by a little bit, but less than what we typically see in the month. So again, positive news for sellers. What about number of sales? 581 versus 590 a year ago, 438 2 years ago. So 581 versus 590, about the same as we saw a year ago. Again, look at the shape of that red line. That's a 6-month moving average. Over the last 3 years or so, since we hit really anemic low levels of sales volumes taking place, it's been a gradual, very slow, but consistent improving picture there. So more sales taking place generally over the last 3 years consistently. So that again is positive for sellers. We are still not back up to normal levels. So for the July average of 212 at 581, we're still less than that. But nonetheless, there has been an improving theme. So what that means, of course, is that it's been improving over the last 3 years, but there's still a ton of room to improve further. We're still at relatively low levels compared to what's normal. So how long is it taking to sell? It's still a long time, folks. 53 days in July. It was 54 days in June. The July average is 40, so there's no question things are still taking a long time to sell in Wellington. Inventory, this is the number of weeks worth of supply on the market. 15 weeks in July versus 17 weeks a year ago and 11 weeks 2 years ago. So a little better than we saw a year ago. At 15 weeks, interestingly, that is exactly the long-term average for Wellington. So on that metric alone, you could conclude that it's a perfectly average, balanced market. It sure doesn't feel like a balanced market though. And one reason for that is perhaps that over the last 10 years or so, the average inventory has been only slightly over 10 weeks. So at 15 weeks, we are seeing a lot more inventory on the market than has typically been the case in living recent memory over the last 10 years or so, which is just over 10 weeks worth of inventory. Number of listings on Trade Me, 2,709 as of a few days ago, versus 2,653 a year ago. So very slightly more than we saw a year ago, significantly more than 2 years ago at 1,848. But again, 2 years ago, heading towards the election, we were in a really constrained supply environment. Then you look at the shape of the blue bar chart. You see that steep declines in the amount of stock on the market. That is typical as we head into winter, because people hold their properties back as we come into winter. People think it's a bad time to sell. Ironically, again, that can make it a good time to sell. Yes, steep declines as we head into winter. Interestingly, steeper declines than has normally been the case. As I indicated earlier, that is because the amount of new listings coming to market is significantly less than we saw a year ago. So in summary, folks, Wellington values are down over the last 12 months, only by a little bit, and new listing volumes down versus 12 months, about almost, or not quite, slightly below average for July, so these are positive signs for sellers. Sales volumes are about the same as 12 months ago, but over the last 3 years have been trending upwards very slowly, but there's still plenty of headroom in terms of room for improvement on that front. Duration to sell, it's still quite a long time, folks, 53 days in July versus 54 in June. These are long durations to sell, about a third longer than what is typically the case of about 40 days in July. Inventory levels are exactly normal compared to long-term norms compared to the last 10 years. However, they are significantly more inventory than 10 weeks or so. Trade Me listings barely up versus a year ago, but down significantly over the last 6 months as we've headed into winter. So the message for sellers, look, fewer listings definitely helps. That's definitely good news for sellers. Less competition, it makes it easier to attract the attention of the buyers. The buyers, there is still plenty to choose from though, so get amongst it. Big thanks as always to Real Estate Institute and of course realestate.co.nz for the data. If you need individualised advice, please reach out. It's Adam here at Low & Co. Otherwise, thanks for checking in and see you next month. Cheers.